If we open the ledger of the cash account, we can understand how much cash received, how much cash paid. What is coming in cash is a real account. What the real account says, debit. What comes in credit, it is coming into the business. A personal account is one which deals the accounts of person. Example, Rama's account, Krishna's account, Sudeep becomes a creditor, goods is coming in, purchases account debtor to Sudeep account. Hello my dear student, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College, a Temple of Excellence, MYSURU. Today, in this session, I am going to have Fundamentals of Financial Accounting, First Semester, Unit 1, Session 3 of BCom, in favor of Problems on Journal Entry. I am going to explain what is a journal entry, how to pass the journal entry. So, we'll move on. Before that, I will explain the three accounts called personal account, real account, and nominal account. In the last session, I have explained. Today, I am going to explain the detailing. Then entry will be passed. We'll move on. What do you mean by journal? Journal is the first entry. Ledger is the final entry. In the first entry means all the transaction will be entered according to date-wise, month-wise, year-wise. It's called chronological way, we say. So, journal entry is the first entry where all the transaction of the year will be entered according to date, according to month, according to year. Journal is the first entry where all the transaction of that year will be entered according to day-wise, month-wise, year-wise. How will be entered? Day-wise, month-wise, year-wise, chronological way. And an entry, ledger is the final entry, where the final figures are going to be. If we ask any question, what is the cash spent during the year means, if we open the ledger of the cash account, we can understand how much cash received, how much cash paid. How much rent paid, go to the ledger, final entry says how much we received, how much you pay. So, ledger is the final entry, whereas the journal is the first entry. First entry will be transferred to ledger. An entry in the journal is called journal entry. An entry will be passed in a journal is called journal entry. Here we say that accountancy can be divided into two groups: personal, impersonal. This will be subdivided into real, nominal. So, accountancy can be divided into two groups. This is called personal account. This is called impersonal account. Impersonal account is subdivided into real account, nominal account. So, which are the three accounts here? First is personal and another is impersonal. Impersonal is subdivided into real and nominal account. So, we can say accounts can be divided into three groups. One is called personal account, one is called real account, one is called nominal account. Now, I am going to explain what is personal account. A personal account is one which deals the accounts of person. Example, Rama's account, Krishna's account, X account, Joseph account, Allah account, bank account. A real account is one which deals the accounts of property, land, building, machinery, furniture, motor car, cash. A nominal account is one which deals the accounts of incomes and expenses and profit and losses. Discount received, discount paid, rent received, all these will be. But there are certain golden rules. On this base, journal entry will be passed. Number one, personal. Debit the receiver, and credit the giver. What's the rules for this? Personal account, debit the receiver. The person one who receives his account should be debited and put on the left hand side. The person one who gives the benefit, his account should be credited on the right hand side. Left hand side is called debit side, right hand side is called the credit side. The person one who receives, his account should be debited. The person one who gives, his account should be credited. But in our accountancy, seller will prepare purchaser account. Purchaser will prepare seller account. Careful. What's the rule? Seller will prepare purchaser account. Purchaser will prepare seller account. So X prepare Y's account, Y's prepare X account. Example, X pays rupees 2000 to Y. Who is the payer? X is the payer. Who is the receiver? Y. The payer should be credited. So he becomes the creditor and Y becomes the debtor. The word debtor and creditor is most important. The receiver of the benefit is the debtor. The giver of the benefit is the creditor. How it will be? The receiver of the benefit is a debtor. The giver of the benefit is the creditor. He becomes the creditor. Who is the receiver? Y becomes the debtor. Here, the person debit the receiver. Who receives? Y. His account should be debited. In X, if we prepare X account, Y's account will be prepared. If Y's account is prepared, X account will be credited. X prepare Y's account, Y prepare X account. This goes in favor of personal account. Then, number 2, real account. Debit what comes in and credit what goes out. What's the rule? Debit what comes in, credit what goes out. So we are referring about the land, about the building, about the machinery, about the furniture. Debit what comes in. If the furniture is coming in, put on the debit side. If the cash is going out, put on the credit side. Debit what comes in, credit what goes out. So if the building is sold, what is coming in? Cash. What is going out? Building. Cash should be debited, building should be credited. So debit what comes in, credit what goes out. Number 3, nominal account. Debit all expenses and losses. And credit all gains and incomes. Debit all expenses and losses. Credit all gains and income. Rent paid is an expenditure that should be debited. Rent received is income that should be credited. Commission paid, that should be debited. Commission received, that should be credited. So debit what? Here debit all expenses, credit all gains and income. So debit means left hand side, credit means right hand side. We move on to problem now. Journalize the following transaction in the book of Mr. Suhas, 2015, January 1st. Suhas commenced the business with cash of rupees 1,50,000. So what is coming in? 1,50,000. Who contribute? Suhas. Suhas is a personal account. What the personal account says? Debit the receiver, credit the giver. Who is the giver? Suhas. His account should be credited. What is coming in cash is a real account. What the real account says, debit. What comes in credit? It is coming into the business. Commencement means capital. Commencement means capital. Cash account debtor. What's the value? 1,50,000 to Suha's capital. $1,50,000. Being, this is called narration, being business commenced. How to pass the entry? Cash account debtor to Suha's capital account. What's the entry? Cash account debtor to Suha's capital account. Debit. What comes in? Cash is coming in. That should be debited. Who contributes? Suhas is a personal account. What the personal account says? Debit the receiver, credit the giver. His account. Commencement means capital. Being business commenced. This goes to 3. Paid into bank. The money paid into bank. Who is the receiver? Bank. Bank means banker is a personal account. Debit the receiver, credit the giver. How much money put into bank? 50,000. So cash is going out from the business. 3.1. Bank account debtor. What's the amount? 50,000 to cash account. Bank account debtor to cash account. 50,000. Being cash paid into bank. So who is the receiver? Banker is the receiver. Bank account debtor to cash account. First over, 3 over, 5th. Purchased goods for cash. So goods is coming in, cash is going out. Debit what comes in, credit what goes out. What's the rule? Debit what comes in, credit what goes out. Purchase means goods is coming in. That is on which date? 5th one. Purchases account debtor. What's the value? 50,000 to cash account. 50,000 purchases account debtor. Purchases account debtor. 50,000 to cash account. 50,000. Goods purchased. Being, what's the entry? Purchases account debtor to cash account, being goods purchased. Then 6th one. Sold goods for cash. We are selling the goods for cash. So goods is going out, cash is coming in. Sold goods, what is going out? Goods is going out, cash is coming in. Cash account debtor. What's the value? 62,500 to sales account to cash account debtor. 62,500 to sales account. 62,500 being goods sold for cash. Being goods sold for cash. What's the entry? Cash account debtor to sales account. Being the goods sold for cash. That is on 6th. This is over. Then 8. Purchase goods from Sudeep on credit rupees 25. We purchase the goods. We have not paid the amount. From whom it is purchased? Sudeep. Sudeep is a personal account. Debit the receiver. Credit the. What is coming in? Goods. That is on 8th. Purchases account debtor purchases account debtor, that is 8, 25,000. From whom it is purchased? Sudeep. To Sudeep account. $25,000 being goods purchased on credit. Sudeep becomes a creditor, goods is coming in, purchases account debtor to Sudeep account. So that is on 8th. Then 9th, sold goods to Puneet on credit for rupees 50. We sold the goods to Puneet. Who is the receiver? Puneet, to the extent of 50,000. Puneet account debtor Puneet account debtor 50,000 to sales account. $50,000 being goods sold on credit. Being goods sold on credit. Then on 15th, return goods to Sudeep, rupees 2,500 for damage. So here one entry is there. We purchase the goods. We return the goods to Sudeep means what is the purchases return? Who is the receiver? Sudeep is the receiver. Return goods to Sudeep is a purchases return. Who is the receiver? Sudeep. Entry 2,500. Sudeep account debtor $2,500 to purchases return. Being goods returned. Being goods returned to Sudeep to the extent of 2,500. This is on 15th. Then over 18th, received goods returned by Puneet. Here the entry, same entry is there. Purchase goods from Sudeep. Here sold goods to Puneet on credit. So Puneet has to, who is returning? Puneet is returning. So debit the receiver, credit the giver. Who returned the goods? Puneet, to the extent of 5,000. What is coming in? Goods is coming in. So it's a sales return to the extent of 2,500. What's the date? 18th. Sales return account debtor sales return account debtor. How much sales return? 2,500. From whom it is written by Puneet to Puneet account. $2,500. Being goods returned by Puneet. Being goods returned by Puneet. So 18th hour. Then on 20th, bought furniture for cash. So what is coming in? Furniture is coming in, cash is going out. Furniture comes under real account, cash also comes under real account. What real account say? Debit what comes in, credit what goes out. What is coming in? Furniture is coming in, cash is going out. That is on which date? 20th. Furniture account debtor. $20,000 to cash account. $20,000 being furniture purchased. Then on 21st, 20th over 20, paid to Sudeep rupees 20,000 on account. We paid to whom? Sudeep. So who is the receiver? Sudeep. How much cash is going out? 20,000. On which date? 21st. Sudeep account debtor. $20,000 to cash account. $20,000 being cash paid to Sudeep. 21st over. Received from Puneet 37,000 in account. We receive the cash. How much money from Sudeep? Debit. What comes in? Credit. What goes out? How much is coming in? 37,500. Debit. What comes from whom? Puneet. Puneet is a personal account. What the personal account say? Debit the receiver, credit the giver. Who is the giver? Puneet. 27. Cash account debtor. It is 37 cash account debtor to Puneet account. $37,500 being cash received. Last entry, 31st, paid salary is rupees 12,500. We pay the salary means cash is going out for the purpose of salary. Salary comes under nominal account. Debit the losses, credit the gain. What's the entry? Salary account debtor to cash account. Salaries account debtor. What's the amount? 12,500 to cash account. $12,500 being salaries paid. I will repeat the entry. Journal. First one, commence the business. Cash account debtor to Suhas Capital, paid into bank. bank account data to cash account, purchase for cash, purchase account data to cash account. So goods sold, cash account data to sales account, purchase account data to Sudeep account. From the Sudeep we purchase, we pay, sold to Puneet, Puneet account data to sales account. So purchases return from Sudeep. So Sudeep account data to purchase return, sales return to Puneet account. Then furniture purchase for cash, furniture account data to cash account. Sudeep to pay, paid to Sudeep, Sudeep account data to cash account. So we received from Puneet, cash account data to Puneet account, paid salary, salary account data to cash account. Salary is a normal account, cash is going out. Hope you understand that all the entries are very simple, but we have to learn the three principles: personal, real, and nominal. I told you in this beginning in the session what is personal account. A personal account is one which deals the accounts of person. Name, only name will come. Raju's account, Krishna's account, Rama's account, Allah's account, Joseph account, bank account. A real account is one which deals the accounts of property, land, building, machinery, furniture, motor car, all these things. A nominal account one which deals the incomes and expenses, profit and loss account. Hope you understand. So one more general entry in the next session. Till then, goodbye. Meet in the next session.